Good morning, YouTube. It is Noah. How are we doing today? Oh boy. So yesterday, I don't really know where to start this off. I feel like I should have a planned and a scheduled intro, but I kind of just wing these videos. I just go with the flow. Like I said, it's for self-reflection. None of this is professional advice. Don't take anything. Don't get me a lawsuit. I'm just recording this to see myself and what I'm doing. That's it. Probably don't even have many people watching this videos, but I ain't worried about that. If I wanted views, I would try to get views. But anyways, yesterday in the video, I stated that the movement of this price, this was yesterday. Here, let me fucking zoom in right here. Yeah, this is yesterday right here. Yesterday I was thinking, I couldn't really tell if it's range today. I wasn't really getting in on anything, but I did say in the video that more than likely, if anything, it would fill the gap right here. It would fill this gap. I keep touching my screen thinking you guys can see my fingers, but I know you can't see my fingers. Anyways, yeah, yesterday we were moving around 280 level, 285 level. It was the one that pulled back down from the new high that it's had, and it had a big drop pull off right here. So obviously, more likely, the market likes filling gaps. The market likes keeping an average price. So if it's too extended one way, it's more than likely going to correct itself and move more evenly in the middle. That's just what it's like. Just like averages. That's just how the market likes moving. And so yeah, it filled up that gap. As of today, I also had a late start today because I was talking to somebody all morning. So I just got over here just really started looking at it. But yeah, I guess it was a nice run. It was a nice run. It was a nice $30 move up, honestly. It was a nice trend day. It wasn't too sharp, wasn't too nothing. It was just nice and smooth on the way to the top. Today had a nice pullback. More than likely, that's what happens whenever it runs up like this in the mornings. What I've realized, or this is my theory, what I've been looking into it, is I feel like at nights, whenever it runs up right before the market opens, it likes to have a pullback in the mornings, and then it will continue the price action on the day. But if you notice right here, it is an uptrend, and then boom, it pulled down when the market opens. And it kind of the same thing happens here. I'm going to see if I'm actually right about this. But, for example, you see right here how it's the opposite. Let me see if I can zoom out. I can't zoom out. But let me go right here. You can see right here on the opposite, it did the opposite at night. It was going up, and then it was going up in the morning, and then it pulled up. Or, my bad, it was going down at night, and then when the morning opened, it popped up. And what I mean by it pulls back or pops up and opens, it's only for like 10 minutes at a time. It's usually a quick move. Like you see how right here, quick drop down, and you see right here, it was literally as soon as the market opened, and it's usually at this exact time around 9:30 when everybody gets in. You can see it had a pop back up, and then as soon as it got down, it pulled down in the market. But of course, that's not 100% right all the time at all. It's just something that I've been trying to look at, see if it puts any dots together. But of course, I'm not going to make any trade based on that because I don't like trading overnight or trading anything that I can't watch or that's more than like 15 ticks at a time, because I feel like after that it's when it gets too risky. I like focusing on the quick profit trades that are 5 or like 10 ticks at a time, because how I like trading is I like going into a market feeling like I have more than a 50% chance, because I feel like if you buy something, buy in the market, and for the next 10 or 20 minutes you have a set 50% chance of it going down or up in that next 10-15 minutes. But I feel like if you're holding any longer than that, then your probability of 50% will go down. And why that is important is because if I can keep every trade around 50%, or try to at least, because it's a market, never say this will happen. Always second, or not second guess it, but anything can happen in the market. So, but anyways, I try to keep it about a 50% probability, and it's easier for you to be 50% accurate in the next 10-15 minutes. The market's going up or down. But I feel like if you're holding longer than that, then your probability gets lower and lower and lower and lower the longer you're holding in the market, because there's more variables that come to play and more things happen, the more levels are hit. But if you're taking a trade on a bounce right here, and then you only want to hold for the next 5-10 minutes, that's good. And if you can keep that 50% probability, or try to at least, and then there's other things that you can notice in the market that will put you up above that 50%. Like, say, if it's on an uptrend, or if it's on a trend day like this, the market likes moving in the trend that it's going with. So as you can tell, on an uptrend, whenever there's pullbacks like this, when it's trending up on the 20 moving average, and see how it's trending up on the 20 moving average, it's a trend day, and then it bounces off the 20 moving average. And that's usually how the market follows on the type of day it is it follows what it's usually supposed to do. So if it's a bullish trend day, it's more than likely going to go back up when it pulls on a bounce. There's just, you just try not to overthink it too much and try to get into it, because that's the issue that I'm at. Is I feel like I have the price action, the studying, all that, not necessarily down 100% at all, because I'm still learning stuff every day, but enough where I feel like when I get into the market and I'm more confident in my trades and have the psychological aspect down, then I can start making money with it. It's just the hardest thing I've realized with trading is the psychological aspect of it. Is because it's tough, because when you get into a market, and you feel like you're doing right, and then the market does whatever it wants. So you get into a trade that is a setup that you like, and the market pulls back the completely other way and goes the wrong direction, and you start thinking you're wrong. And then when that happens a few times, which happens with every trader that wants to be successful, you're going to lose money for at least a year or so. You're going to lose money to learn how to do it, and it makes you, it kind of gets you to hesitate sometimes when you get into a trade, and that hesitation can in the run pretty much ruin the whole trade, because you could be 100% right about it, but if you hesitate in executing the trade, or if you're not 100% confident, then that right there could allow you to get in at the wrong price a few ticks higher, and then you not get the price that you wanted, or it goes south the wrong way. Like, it's there's a lot of psychological things have to do with this, or you just get scared to even make a trade. Because I've noticed I feel more comfortable making trades on the simulator account, because on the simulator account, I'm up $3,900 on the year off one contract, and that's the only thing I've been trading, and I have been taking that seriously, and I'm up on that. And whenever I get into the real money account, I can obviously tell the difference in my confidence when I'm executing on my trades. And really, the only way to get through that barrier is to make real money trades. So that's just the level I'm at right now. But anyways, let's get back to talking about the market and how it's moving today. This morning I had a pull back. It hit back to that century level, like I was saying, how when it hits these century levels, it likes to teeter totter in between that level. It's going to pull down and pull back up to that price, and it's hit back up 3,000. It pushed back 3,000, so that's good. Honestly, let's draw some channels right here. I feel like channels are very crucial, and trend lines are very crucial, especially when you're trading in ranges, or when you're scalping or trading like that. I'm gonna get on my tick chart. Let's see. My prediction on this day, really not sure. I feel like it's going to try to push towards the high that I already made today, because you can tell it's already making the higher lows is what it's already pulling up on, so that's a good sign. 20 moving average has crossed over the 50 moving average, and that's good. It's another thing I like doing. I've traded stocks, I've traded penny stocks, I've traded a little bit of everything. I've used 20 different indicators at one time. I've used, your VMOS, I've used VWAP, I've used tons of indicators. I've had every moving average on the screen at one time. Like, but I've realized the simpler you make it, the easier it is to trade. Because there's less you have to think about, and there's less that's confusing you. That's for me, at least. Everybody's different, of course. And that's the beauty of trading. But I like sticking with just the 20 moving average, exponential moving average, and the 50 exponential moving average. Because those two, I feel like, for price action trading and for this tick level, it works the best. Because as you can tell, like right here, it rides it, or right here, it rides the top of it when it's on a downtrend. It's just that little indicator. It's a sweet spot. It's all you need, in my opinion. And whenever the 20 moving average crosses over the 50 moving average, that means it's a change of trend. That means it's starting to go on an uptrend. You see right here how it crossed under it and it was moving down. It's a downtrend. You see right here how the 20 was above it and the 50 is below it. It's moving on an uptrend. That can also help tell you what kind of market is trending at that moment. And which, it's pretty easy to tell if the market's a trend day or a range day, because if it's a range day, it's just going to be going down and up, down and up. It's just going to be staying at a average price level, compared to a trend day, which necessarily, not saying this is a trend day because this is just overnight, but this is a trending market right here, how it's just going up, and it just keeps bouncing off the 20 moving average. That's a trending market. Right here, looking at it, honestly, this video might be long today. I just like talking, but it has a new higher support level right there. That's good. Pushed up here, price. It pulled back right here, didn't fail, but of course, it doesn't have to be the end of it, because you can tell it was trying to trend right here. It had a leg down right here. Was a failed second entry long is what this is, and failed second entry long. It pulled down, and not really. I'm no genius. Can't really predict anything. The market does whatever it wants. But I think I'm going to make some trend channels with this right here, and I feel like it will run through these channels. But really, at the moment, I don't see any trades that I'm making. I'm kind of expecting a range day, since it had the gap, filled the gap on there, but, it might push towards the new high that it reached up here. But of course, with this huge leg right here, that's never good to see. So that kind of has me on my toes right now in this, if I'm trying to be bullish, because I am more bullish than I am bearish. I still take bearish trades, of course, if I see a bearish market, but I also, for some reason, it's easier for me to spot out bullish momentum. And right now, I'm not really seeing much bullish momentum. Thinking it might pull back down, or it might break through, because I feel like it should have broke past this level, but it failed to break past that level. It only came up to 3, so it might pull back down. This all week might just be a pullback or correction week, and we might continue the market, because look at this run up. It's been crazy. It's what it's been doing. It goes up a lot, then it goes down, then it goes up, then it goes down, then it goes up, then it goes down. That's really just what we've been working with since December, is just up and down. Honestly, every pullback you buy and you make money off of, it seems like. That's what I've been thinking about doing, is every time this market pulls back crazy amount, it bounces back the next day, and then it'll either pull back by the end of the day, but almost you could probably make money just by buying every pullback here, because look at it, literally every big pullback goes up, pullback goes up, pulls back goes up at least $20 at one point. Pulls back, goes up. Of course, if you're holding in for the whole day, that'd be stupid. But on a big pullback like this, you can definitely make a few ticks off of it if you're willing to do that. But either way, I'm starting to like these videos. I'm starting to get more comfortable with them. It's nice. I'm definitely going to be doing this every day. 11:30 every day is when I do these videos. I was supposed to do end of the day market recap yesterday, but I didn't do that. I should have. Kind of forgot about it, honestly. But let's do that today. We'll do end of the day market recap today, because honestly, I feel like it's helping me out just as much, even if not more, than when I was writing in my notebook. But well, that's it for the day. Thank you.